So Eddie,
Yes.
you were interesting cover in the sense that why did you suddenly start talking about personal loans? I mean, of all the things to talk about, it's like why suddenly personal loans?
Okay, because I was monitoring Bank Negara's banking system data
Yeah.
month on month,
Yep.
every month, and I noticed that personal loans was the only loan component where gross impaired loans, more or less bad loans,
Yeah.
were jumping up. They were growing at a really high rate compared to the other components, say like credit cards. For instance, personal loans was in September, which was the latest data available. They grew 31.7%
Wow,
year on year.
that's
Now
more
you
than double
compare
digit.
that with credit cards, which was 5%, and mortgages, which is the biggest component within household loans, and that was just 2.9%. So I
Wow.
thought, wow, and every month it seems to be growing at a fast rate year on year. And I looked at the chart, the graph, and it looked like it was trending upward. So I thought, oh, this is the only thing that seems to be moving
A bit
in a, we won't say dangerous. It's not alarming, but
No,
it
but double
sounded
digit
like,
is quite bad. I mean, it's like it's more than double digit. You're talking about like 30%.
and a pretty high double-digit rate as well.
Exactly.
Yeah.
So you actually talked to Bank Negara about this, and okay.
No.
The gist, well, as in like you emailed Bank Negara, and the gist that I got was they're telling you that it's not that bad, but they are looking at it. Is that it? Is that the gist?
They're saying the rise in impairments is expected given this current environment, but they're saying it's not alarming. And we're not saying it's alarming either. Even talking to analysts, they don't think it's alarming, but they are taking note of this, and they're saying this is something that bears watching. It could go out of hand if left unchecked, but yeah.
All right, and then of course a lot of the guys who are giving these personal loans are actually not really the banks. You're looking at guys like Aon, RCE. They're the ones who give the biggest, right, for this.
They are. So Bank Negara's banking system data just covers data for the banks and Islamic banks. So it doesn't cover the development financial institutions, and it doesn't cover the what you call the non-bank financial institutions.
Yeah.
So this would include banks like Bank Rakyat. We call them financial institutions.
Yeah.
So financial institutions like Bank Rakyat and NBSB, Malaysia Building Society Berhad,
Alright.
and Aeon Capital, RCE. Now these are very big players, and that data is not captured within the banking system data. But yes, they are the biggest players. For instance, Bank Rakyat, which is the biggest player, they've got something like a 30% market share, and their total portfolio is almost as big as the entire banking system's personal loan.
Wow.
Yeah.
That's substantial, isn't it?
Yeah.
But isn't that because they also lend a lot to the civil servants?
They do. The bulk of their customers, their target customers are actually civil servants. In fact, 80% of their customer base is are the civil servants.
Yeah, which was quite interesting because you think that civil servants, if you give them the loans, it's like gold, right? Because you just lean on their salaries or you
Yes,
deduct
because
straight.
they go through this system where there's an automatic salary deduction. So you'd think even if they were going through stressful times,
You'd still get your money back.
Yes, but the thing is, there are ways in which it could go a little bit wrong. For instance, we spoke to MBSB CEO, Dato' Ahmad Zaini, and he was explaining, he says it can go wrong when civil servants leave employment
All right.
and they cease their payment. So
Okay.
that's one way. And then we talked to some other bankers on condition of anonymity, and they also said, there are other ways it can go wrong. For instance, if civil servants transfer between departments, it could take a while. It could take a while before things,
Get settled or
get
like,
settled. Yeah, so there could be disruptions there. Apparently, a growing number of younger civil servants between the age of 23 to 30, that was the age range cited to me, they're leaving more of them are leaving the civil service, and so they would have taken loans, and once they leave,
they
they
can
could
be irresponsible.
and not pay up. So those are the little pockets.
Okay,
of
which is
examples
actually, that's why when you said that the defaults or the gross impairments, the guys who have a probability of not getting their money back is going up, surprised me because I thought at least civil servants you kind of be assured that they pay back. But I suppose, like all the other evidence, right, it seems to be that it's easier and easier to get personal loans these days. I mean, we've got
How many times have you gotten calls, over the phone asking if you were interested in taking
so
up
many,
a personal loan?
so many who
That's
call
the thing.
me overseas.
We get so many. We hear of increasing anecdotal evidence of people getting calls, people getting WhatsApps, people getting emails, asking if they want to take up, unsolicited calls, basically asking if they want to take up.
And it's
loans.
like really small amounts, like saying, oh, do you want 10,000 that you can pay over a certain amount of year?
And you
it's
could be tempted to take it,
Yeah,
right?
because you can see who they're actually targeting, which a lot of these guys are like people with mean salary 3,000 and below. So bring it back to that. Does that mean Bank Negara is going to sort of tighten their regulations now?
They sent us, an email response to the questions that we sent on Friday night. And, first of all, they say, okay, the rise in impairments is not alarming. And the second interesting thing that they said is that, they're going to be working with the relevant ministries, and they said they're going to develop a new law that will bring all credit providers within the regulatory ambit of the new law.
Which actually,
which would
in
bring
layman's
about to
speak mean-
better protection for consumers. Because we've got the alungs out there, we've got the private money lenders, we've got even pawnbrokers that can lend. They don't come under Bank Negara, they come under this very old act called the Money Lenders Act 1951, and that has recently been, people have asked, recently, should that act be repealed? Because, there was this controversy about 2 months back about how property developers can now be allowed to lend. So, that act is suddenly being
a bit worried.
Yes.
So the thing is, it's one of those things where I suppose you watch this space because it can turn bad.
Yeah, it can turn bad. You want to watch it to make sure that there's sufficient curbs and everything. But we have to put things in perspective. This might grow into a bigger problem than what it is. But personal loans as a percentage of overall loans is very small. It's just about 4.4% of the overall banking system outstanding loans. This is just within the banking system. So, is it going to lead to a systemic risk if people don't think so? But still, these are weaker economic times, and you don't want people going into debt.
For more on the stories, pick up a copy of the Edge Weekly at all good newsstands.